When you're trading Forex, should you be using technical analysis or fundamental analysis, or a combination of the two? That is exactly what we will be speaking about in today's video. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel and I will see you in the video. Okay, so in today's video, what we will be doing is, first of all, answering the question, are you supposed to be using fundamentals, technicals, or both? And then I will give you a full breakdown for GBP USD, which, as you know, is a very interesting pair to follow. We spoke about it a couple of days ago, and now the market has reached exactly our target. So it's time to make an update on the pair. So first, let's speak about, are you supposed to be using technicals or fundamentals? Well, the simple answer to this is you're supposed to be using as many confluences as you can, okay, when you're analyzing the market. Now, this is what works for us. We have tested it, back tested it, live tested it for years, and it works very, very well. We follow, obviously, the technicals as you have seen in all my videos, but at the same time, we also follow the fundamentals indirectly. What does it mean? We don't really follow them directly, but indirectly. And why? Because we check the COT data. Now, what is the COT data? Is the commitment of traders. Basically what the non-commercials in the market are doing, which are the best speculators that they are. They're winning most of the times. They are the hedge funds, okay? Now, hedge funds are winning most of the time and they follow fundamentals pretty well. Obviously, there are different types of speculators, those that focus on a HFT, but in general, they're winning most of the times and they follow fundamentals very, very well, better than we could ever do it. So by following their orders, the way in which they shift their positioning. For example, here you can see that they're shifting to a negative positioning. So they're increasing their shorts and decreasing their longs. You can understand that they have a bearish outlook on a certain currency, and we can take advantage by having this edge over our competitors in the market. And that is what works for us. So the simple answer to this is use both. Use technicals and fundamentals. Now you can focus on studying the fundamentals themselves, or you can just follow the orders of hedge funds. That is what we do, and that is what works the best for us. So this is the answer to the first question that we had. Let's go to the second point of this video, which is giving an update on the analysis for GBP USD. Now, if you remember from our previous video, what did we say? We said, and by the way, guys, I will link that analysis in the description. It's from a video from a couple of days ago here on YouTube. You can go and check it out. I really suggest you go and check it out because it's obviously more education. What did we say in that video? We said that from here on GBP USD, we definitely expected the market to make this move to the upside to go and test the previous support here, now turn resistance. So to complete, we definitely wanted to see the market go and complete this M formation, which is exactly what the market has now done. So we had an M formation and the completion zone of the formation was exactly the previous resistance, now turn support, increasing the confluence for the move to the upside. And what we could also see from a COT perspective on GBP USD was that clearly we had seen a shift to a more positive net position. So we went from minus 36K, so way more shorts than longs, with 63K shorts and 26K longs, to having a decrease in the shorts, so from 63 all the way down to 45K, and an increase in the longs. So obviously a shift to the upside, all the way up to minus 15K net positions. So hedge funds were increasing the longs and decreasing the shorts on GBP USD. Obviously great confluence because, as I said, that is how we look at it. And From a technical perspective, everything was indicating for the move to the upside to the neckline. And in fact, that is exactly what GBP USD did. Now, what is next? Okay, what is next for GBP USD? Where is the next opportunity that we can be looking at for this pair? Now, we know that here at the neckline, so the previous support to resistance, we have, as we just said, strong resistance. In fact, is the completion zone of the pattern from a daily perspective. Let's go and see what we have on the weekly. Now, on the weekly, what we can see is that this was and is a very strong structure level. Why? Look at what we had here. Now, if you remember in our first analysis on GBP USD, from this area, we wanted to see the market break down to this previous resistance, now turn support. I will link also that analysis in the description. So we wanted to see from here, the market make this move to the downside, to the neckline, and that is exactly what GBP USD did. I will link also that one in the description so you can go and check it out. And the market did also better than that. It broke below the neckline. Now, there is a reason for which the neckline is the target, because as we said, is the previous resistance, now turn support. And if the market breaks it to the downside, it's turned again resistance. So we have also resistance on the weekly time frame. And another thing that we can notice, if we extend this zone to the left, we can see that this was a historical structure level for GBP USD. It was acting as very strong support here, again support here, resistance at this area, the market broke above, turn support here, the market broke below, turn resistance here. Here we had obviously the fake breakout to the upside to go and test this area from which we said that we wanted to see the market make the move to the downside, and the market has given us the move to the downside. And now this area is acting again as resistance. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Okay, so weekly and daily time frame are both showing the potential for a rejection from the resistance that we have just identified. Let's go back on the daily. Now on the daily, if we look at the pattern, okay, the information is completed already. Let's look at the new pattern that the market is creating. We have an impulse and we have a correction to the previous support to turn resistance. After an impulse and a correction, what do you expect? You expect the market to make another impulse to the downside. Now, if we go back to check the COT data at the moment, as we said, we wanted to see the move to the upside because we have seen an increase in longs and decrease in shorts in the short term. However, if you look at the long term, what we can see that we went from 35K all the way down to minus 15K. So we went from having way more longs than shorts on the pound to having way more shorts than longs. So we can expect more continuation to the downside, the overall trend to be to the downside after the correction that, yes, was expected. But this is a great area to close the longs and add more shorts. So a great zone to go and fetch some liquidity. And that is why we as well wanted to see the market make this completion. Now, if we want information on a retracement in the market like this one here, where are we supposed to be taking our Fibonacci? From the high to the low of the impulse. And what we can see that currently the market is in between the 50% and 0.618, aka the golden ratio. Definitely a level from which we can expect a reaction to the downside. So we have our structure. We know that overall we would like to see the market from here show a rejection to the downside. How are we supposed to be approaching this situation? As usual, guys, monthly, weekly, and daily are the best time frames for direction. When it comes to entry, the best time frame is the 4-hour time frame. And here on the 4-hour time frame, all that we see is absolutely a bullish market. Everything is pushing to the upside. The market is creating higher highs and higher lows, rejecting the previous resistances, now turned support. So everything is bullish. So can we be looking for the short? Obviously not. Okay, we cannot be looking for a short position in this kind of situation, but things might change in the future, this week or next week. So as usual, we have to be reactive in the market and not predictive. Okay, so the way in which we will be approaching GBP USD with students is like this. We will be monitoring price action on the 4-hour time frame inside of this area, and if the market will show us weakness, so it will shift from a bullish market to a bearish market. And after that, it will provide to us one of our valid entries. Then we will be taking a nice short with a very good risk to reward and very good probabilities for the continuation to the downside and the completion of this impulse correction and impulse pattern to the downside. Now, if everything will remain like this from a 4-hour perspective, then what we can expect? We can expect the market to just continue the move to the upside, break back above the resistance, which at that point will be turned support, and on the retracement back to the area, we can be looking for an inverted head and shoulders continuation to the upside. But I will keep you guys updated on that if the market will actually manage to break above the structure. But at the moment, let's keep this scenario in mind because the market is still below resistance. But you really have to understand this. Trading is reactive and not predictive. If everything will remain like this, the market will easily break above this resistance. That will be then turned support, and we have to adapt to that market structure, and we will adapt to that market structure. But at the moment, this is what we have. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you a complete market breakdown showing you exactly how to apply the strategies with entry, stop, take profit, and I also answer every single question that you have every day, including the weekends. So it's a very complete program. I suggest you go and check it out. Link is in the description, or I will see you in the next video.